gold is for war. So, when your back's against the wall, that people will only take gold from you in payment, and that goes for countries as it does for individuals. So gold is bullets. So if you imagine that you're heading towards, you don't have to get there, but you're heading towards war, or the likelihood of war. The likelihood of war is going from 1% to 3% to 5% to 7%. You've got to have more gold in your basement, haven't you? And the more tension there is, the more gold you have to have in your basement. It's just like it's like in Britain, they're now building munitions factories. They've said they're going to build munition factories. Well, they better be buying gold bars as well.
This is Little by Little with Andy Schectman.
All right, welcome back, everybody, to another episode of Little by Little. I'm very excited to have with me Clem Chambers. Clem is the founder and CEO of a new FN, as in Financial Network. Clem, it's good to have you here. Thank you for joining and hopping on in. What's going on? How you doing?
Oh, doing good. I've been talking about gold is for war for some time now, and the world seems to have caught up with my crazy ideas. And it's a little bit unsettling to have strong opinions and then suddenly they all come to pass. And I wish they weren't, frankly. I mean, I said a couple of months ago, gold could go to $5,000. I hope it doesn't. And I know your viewers will probably have tons of gold and hope it does, but the implications of $5,000 gold or $10,000 gold is not happy.
Yeah, and I'm going to ask you about that in a little bit. I know one of your comments is that gold is for war, and we'll get to that because that is scary when you think about things that you saw in your mind's eye based upon a progression of events that lead to something maybe not so pleasant, and it starts to happen. And then you have to wonder, is it a good thing or is it not a good thing? Certainly for the people who holding gold, their portfolio will go up in value, but it is something that maybe people would trade for a little bit of peace in the world. But we'll get to that. Let's start with maybe big picture framing. We'll start with the U.S. and the economy, but I'll ask you kind of in a metaphorical way. Imagine that the U.S. economy, Clem, is a stock on your watch list right now. Would you be holding, buying, or selling, and why? In other words, where would you place your bet and why?
I think I would just sell. It's a very highly valued stock. It's got a huge PE. It's got a massive turnover. But this new CEO worries me a lot. And so I think, he's a bit of a wild man, this CEO, and maybe he is a Steve Jobs, maybe he is an Elon Musk, or maybe he's not. Maybe he's one of those just wild CEOs that don't do their companies much good. And if it was if it was a low PE and it needed a turning around in a way, then I would say, maybe I'll have a little bit of that. But it's so highly valued. I mean, the dollar is way overvalued. The stock market has the highest valuation metrics that I think in the history of ever. So, it's like risk equals reward. Well, if that's the case, we should get a lot of reward because we've certainly got a lot of risk now. And, unfortunately, risk is the ability to do really well or really badly. So, if it was such a wonder stock that was a part of my undiversified portfolio, because I'd gone all in and bought the dip and only really had a couple of stocks, if the USA was one of them, I think I'd be going risk off. I think I would be lowering my exposure. And actually, I did that when before that all collapsed and then made an amazing recovery. I sold all my US stuff as soon as I saw what they were saying about World War III in a not very masked way. I went, oh no, bye. Because it for me that moment was pretty pivotal.
Yeah, understood. I appreciate your candor, and I agree with you on many levels. I do. unfortunately, I guess I could say. And this leads us to a broader question, because, like you, many people believe that this stock might just be overvalued or heading towards turbulence. I'm one of those.
Already in it, already in turbulence.
Right. And that, we'll get to that in a couple questions regarding gold. But in your view, speaking of turbulence, are we heading towards some form of a full-scale economic reset, or could it just be maybe a deep correction? And in other words, do you see this as a cyclical shakeout or something more foundational unraveling beneath the surface?
You see, there seems to be a choice. And basically, the whole political system in the US has gone mad. Let's face it. I mean, the Democrats, terrible. The Trumpians, I mean, do you even call them Republicans anymore? Are wild. The division between those two groups is incredibly wide. And so that makes for a very unstable picture. But it really, I mean, I'm quite happy to say I have no idea what's going to happen. Yeah, anybody that I mean, I cracked a joke on another show which said anyone who thinks they're inside Donald Trump's mind, I feel sorry for them. But that was just a joke. But, anybody that thinks they know what's going to happen next, I don't think they should. I don't think it's predictable. What they set out to do has clearly been generally reversed. So all the tariff stuff, well, where's that now? Is it 10%? Is it 20%? Is it 40%? Is it going to go to 5? Is it going to go to 100? Nobody knows. Nobody's allowed on. Oh, it's the art of the deal. Is it? Okay. All right. I don't know what's going to happen next, but I know that he knows is a position of a lot of people. And a position of the other lot is that he doesn't, it's insane. It's insane. So the actual reality, nobody's really taking it. And it's not meant to be easy to define it either. So it's all up in the air. Well, that's not good in the long term for asset values, because asset values need stability. Now, the old system of stability is this sort of slow glide decline from America being preeminent to America being another country amongst others. And, I can see why people would want that not to happen. I can see that being a really good thing or a really bad thing, but it's a long, strategic, slow glide down over a generation, or maybe two. Yeah. But the way that it's going now, it's like an attempt to fix all the problems of the last 30 years in 90 days. And to me, it's the tempo of what this administration is trying to do that's causing the problem. You might be able to do it in one administration, or half of it in one administration, but you can't do it in 3 months because, it's like tying yourself to a rocket and lighting a blue touch paper. It simply, there's no way that it can work that quickly. So, and is the plan the same? It seems to have changed. The plan was to onshore everything into the US. It was all going to be great. And then all of a sudden the market said, you'll wreck everything. And they did a pivot. And now, where exactly have they pivoted to? They were going to cut costs. Well, now we've got a budget that's, more spending. The guy that was going to find all these savings is calling the actual move of the administration he left 10 minutes ago as an abomination. So what does that all add up to? It adds up to, it adds up to what looks like chaos. So, and then you've got this thing about the administration telling the Europeans, well, you're fighting the Russians now, see ya. We're going to be fighting the Chinese. I mean, that's not happy. That's really, really about the least happiest thing you could ever hear. Yeah. And, then you go and see the Chinese Taiwan assault ships that are on legs. Bridges on legs, because Taiwan is a cliff, one big round cliff with 3 beaches. Obviously, you can defend 3 beaches. So you've got to build a ship that's got an elevator on it and a bridge. So if you go to look at Taiwan invasion ships on Google, you'll see these Chinese ships with these contraptions on it that make them look like something out of War of the Worlds. So, and then you've got America saying, oh, we've got to pay attention to Asia now. By the way, we're not so keen on you. Look after yourself in Europe. the implication of that is absolutely drastic. So what does that do to asset values? Well, I mean, as soon as I heard that, I came out of the market crashed, and then it recovered again, but I got back in purely in precious metals and military defense stocks. And on about a quarter of my portfolio, I've made half the money I would have made if I just sat there and watched it go back up again. So quarter the risk, half the return. But that's the sort of, trade I like to have when tomorrow, you don't know what's going to happen. I mean, is it going to be 72.5% tariffs tomorrow, next Friday? I mean, it's just all up in the air. And I'm actually amazed. And in fact, I don't know what to make of it, that the market has taken it so well, and that there hasn't been way more chaos and insanity in the markets. And we really haven't seen any. I tell you, if Biden had said it, the market would have absolutely, imploded. Or any other president I can think of in my lifetime has said the sort of things that are coming out of Washington right now, the markets would have just melted down. And that would have been it. That would have been, all she wrote. But they haven't. And it still looks kind of, it still looks wildly dangerous in the market. But somehow you can have this kind of signal coming out of the pinnacle of power. And it hasn't actually, it did wreck the market. And then suddenly the angels sang and we had the biggest rally like there's never been in the history of the stock market. So all I see is danger, frankly.
Yeah, you got to wonder how much of that market movement is aided with a little help of the government, kind of like the Fed coming in and buying $45 billion worth of treasuries last week.
A little bit more than a little bit of help.
Yeah, a little bit of help. I'm curious of your take on the BRICS. I'll frame it in the respect that Sergey Lavrov came out recently and said their new cross-border payment system, which is in essence the M-Bridge, which has just been connected with 11, I believe, Asian countries in Southeast Asia and 5 countries in the Middle East that currently comprise about 38% of global GDP, on top of course, the BRICS network. And then you have the Shanghai Cooperation Organization, the Eurasian Economic Union, and the Belt Road Initiative, all aligned with China, but not part of the BRICS. The reason I mention all of this, a lot of people have been, think that maybe the BRICS is just a fad, that they don't have enough to stand up to the West. Their influence isn't great enough. Well, what a lot of people are missing, and I'd like your take on it, Sergey Lavrov, the Russian finance minister, came out and said this new bridge technology, which is not compliant or not compatible with SWIFT, which allows settlement in 7 seconds outside the purview of the West, instead of the 3 to 5 days it would take to do these international trades using the SWIFT system, using intermediary banks and whatnot, not to mention a 98% reduction in costs, would be open to non-BRICS members. Now, I'm assuming he means the Belt Road, the Shanghai Cooperation, the Eurasian Economic Union, and these Asian countries which he's already connected or have already connected. And they go as far as saying that this new platform would not be compatible with the pound, the euro, or the dollar. They go out of their way to say that. With all of that being said, in your mind's eye, how relevant are the BRICS, and how much of a threat is it to the dollar hegemony? Is it a big threat or not at all?
First of all, I've got to say, the dollar hegemony, why is that a good thing? Now, I answer that question because the American national debt is only owned abroad, but 25% of it is owned by people that aren't Americans. So you can chop off 75% of the American debt, and that's what has been bought by foreigners. Now, China holds $800 billion worth of American debt. Less than 1 trillion out of 32. So not necessarily a big, hairy deal. Now, ask yourself, why does America have this horrible trade deficit? Well, it's because it has to have this money flow to be the reserve currency. So what's the benefit of being a reserve currency if it hollows out your industry and it makes you go into decline because you have to have all this confetti out in the world? Why is that a good thing? Now, the other thing you've got to ask yourself is how much money is there in China? Chinese money, how much is it in comparison with American money? Now, most people say, well, obviously, America's so much richer, has way more money than the Chinese, even though the Chinese are rising. China has twice as much money as America, twice as much in dollar terms as America. Wow. It ain't the reserve currency. Do you think that might be on purpose? Because if they were going to be the reserve currency, they'd have to be having a trade deficit, wouldn't they? Yeah.
You speak of Triffin's dilemma.
Well, I guess so. The point is, they don't want to be the reserve currency. They could be. There's more Chinese money in the world than there is American money in dollar terms. So they are the big 800-pound gorilla in money terms. They don't want it. They want exchange control. They don't want it flashing around and messing up the system. So that's another thought to have. And another thought to have is BRICS. Okay, Brazil. Yeah. How good's their money? Not very. Yeah. Russia. Ooh, how good's their money? Russia has 5%, 1/20th of the economic power of Europe. 1/20th. So it doesn't even count, right? Well, China, they don't want to have their capital flowing around the world. They've got blooming, force fields up to stop their money flowing. And India. Now, India is another superpower, but they don't want their money flowing around either. So how good's that going to be for a monetary system when you've got two broken, hyperinflating economies plus two that don't want the money flowing around? Doesn't have a ring of much of a competitor against the other system, which is, the free trade world with floating currency system. So, I think BRICS is and de-dollarization. Well, I mean, if China just said, oh, okay, we'll let the yuan go wherever it wants to go. We've got we can make light bulbs in China, we can make steel in China, oh, we can do rare earth in China, we can make all that stuff that you can't make anymore, we'd be the currency now. They'd be the currency, wouldn't they? If they've got more money, there's more of it. They're richer. There's 4 times as many people, but they've got twice as much money. So an individual Chinese has half the money of the average American, but there's a lot more of them and they've got a lot more money. So if they wanted it, they should just go and they could have it, but they don't want it. They don't want to do what America's been doing and basically, giving it all away just so they could have the reserve currency. I mean, remember, people say, oh, reverse currencies. Yes, the British were, the French were the reserve currency. Oh, and then it was the British and now it's the Americans. Well, why were they the reserve currency? Because they were the workshops of the world. Oh, guess who's the workshop of the world now?
China. Well, and one of the things that's important to note is that we have yet to hear them come out and talk about a common currency. What they're talking about is a settlement currency that is pegged to gold, with gold being the
I don't think they're talking about pegging it to gold. I don't think they're really talking about that. They can't peg. Brazil can't peg anything to gold.
It's not pegged to gold. No, they did come out and issue something called the unit, which is a in theory, they've agreed to 40% gold backing redeemable. But the way that they've been doing it now is trading over this bridge technology with local currencies and settling imbalances in gold. And so you have the Shanghai Metals Exchange that is talking about opening exchanges and starting with in Saudi Arabia and Hong Kong for this purpose, so that all imbalances are then settled in gold and to internationalize the scope of the Shanghai Metals Exchange. Look, the bottom line is simply this. For the first time in my lifetime, there's actually talk of settling transactions in something other than the US dollar, and more importantly, in putting reserves in places other than the US Treasury market. And the ramifications of that happening, I guess we will have to see how that plays out. Would you agree with that?
That could be really good because, the one thing that America has to fix is this absolutely wastrel spending of the American government. I mean, that's what's breaking the neck of America is this wayward spending. It's just, the deficit. The only reason there's a trade deficit is because there's a fiscal deficit. You don't have to have a trade deficit if you haven't got a fiscal deficit. One drives the other. So, it's if this big, beautiful bill, if this current administration had come in and said, right, we're going to do what Reagan and Thatcher did. We're going to cut the fat. We're going to make lots of people squeal that their cushy numbers are over, and we are going to get this back under control, which was meant to be Doge. Yeah. And the two people that went in, one person came out there like within 3 days, went through the door. Oh my God, boy. And then, now Musk is gone. So that's dead as a door now. And there's this bill coming out, which is going to pump up the debt even further. That is the core problem.
Yeah. With only nine billion in savings on Doge, and another couple of trillion added in deficit spending, there's a problem with math, is what you're saying.
You can't keep running those. Well, you can keep running them because that's why you get inflation, because you just print the money and then the value of your dollar goes down. And, historically, that's how this is handled, through inflation. So you end up with 7, 8, 9% inflation permanently. And if you still can't can't get your act back together again, you end up with 14, 15% inflation. You end up being a South American country, and that's how they do it. They just print the money, and inflation is a reverse tax. It's a kind of tax, and they get their money through inflating by printing it. You had $100, well, we printed an extra 10, so now you've got $93 of buying power.
Then the question becomes, how do we continue to finance our deficit spending in an environment where the treasuries are yielding arguably less than real inflation is running? These are the pickles that we find ourselves in. To your point, the question just becomes, how does it all play out? I guess only time will tell. And look, whenever major upheaval looms, I think investors and governments alike tend to turn towards things like gold. And we can see that the United States has become a net importer of gold. The countries around the world, their central banks, have bought more gold every single year, it seems, for the last several than ever before. You have the most well-informed traders on the planet that seem to be hankering for gold, not only purchases, but also repatriation in their own possession and off of the exchanges. So, in doing a little bit of research, Clem, on your thinking, you mentioned and emphasize, if I'm not mistaken, gold's role as a strategic asset during times of geopolitical tension. And you're kind of saying that that's where we are right now. You've even said gold is for war.
Gold is for war.
Can you unpack what you mean by that? And is gold more a weapon or a shield in today's fractured geopolitical landscape?
Well, gold is the currency of war, because if you're fighting a war, people won't take your confetti for very long. So you have to pay in something which everybody agrees is good, unlike paper, because paper is just a promise. Gold is a big lump of metal. And, that is because if you think about gold and you think, why does a country hold it? They don't have a jewelry industry. Why does America park tanks on top of their gold? Why does the British even have it? Why did they sell half of it at one point? Yeah, well, because it's a strategic metal, not because it makes gold teeth and jewelry and circuit boards. It's because that's what you end up paying in. And, there's a story I quite enjoy. The Portuguese were one of the few places you get tungsten in the Second World War. And the Germans, well, it was a fascist state. So the Germans said, hey, we'd like to buy some tungsten, please. We've got tanks, we need the tungsten. And the Portuguese said, fine, go on, then pay for it. And he said, well, we happen to have all these English £5 notes, and that's just as good because you're kind of neutral. We'll just pay you in these £5 notes that we got our hands on off the British. So they paid in the £5 notes, and the Portuguese found out that they were forged by the Germans, right? So they ended up having to pay in gold, not in confetti. Yeah. Gold is for war. So, when your back's against the wall, that people are only take gold from you in payment. And that goes for countries as it does for individuals. So gold is bullets. So if you imagine that you're heading towards, you don't have to get there, but you're heading towards war or the likelihood of war is going from 1% to 3% to 5% to 7%. You've got to have more gold in your basement, haven't you? And the more tension there is, the more gold you have to have in your basement. It's just like it's like in Britain, they're now building munitions factories. They've said they're going to build munition factories. Well, they better be buying gold bars as well. Yeah, there's no point in building a munition factory if you're not laying in gold.
In that environment where people don't trust anything paper, would you say gold is offering these non-aligned central banks not only a politically neutral alternative, but in a world where perhaps access matters more than yield, would you say gold then is becoming the ultimate bearer asset, maybe even more so than the U.S. Treasury, as a result of weaponization and the move towards perhaps tensions and hopefully not war?
It's just a munition in a sense. It's gold is for war. It's bullets. It's money for war. And back in the Second World War, they were sailing gold around in battleships and submarines between states. Yeah, and that was its purpose. That is its use case. It's jewelry, circuit boards, and currency for war. Those are the three use cases for gold. Outside of that, it would be if people didn't need it for circuit boards and didn't need it for jewelry and didn't need it for war, it would just be an uncommon metal that nobody was interested in. Yeah. So its use cases, that's what gives commodities and lots of things their value. It's like a screwdriver. What's the use case of this screwdriver? Well, putting a screw in. Okay, well, that's worth whatever it costs to buy a screwdriver. Yeah. Gold is a tool. And its big function from all time has been as the currency of transactions in war. You go to war to get gold. That's what they did. Oh, let's go and burn some country down and take all its gold and melt it down and hand it out to the soldiers. Ever since the ancient times, that was what gold was. It hasn't changed. But the world got more peaceful, and therefore the value of gold dropped significantly. And as the tension has turned around, and the every turn of the screw, the price goes up.
In listening to what you're saying, Clem, it seems so much like you speak of gold as being the ultimate form of trust in a world and in a time where perhaps trust is lacking. Wouldn't that really say, in another way, that it is the preeminent way of holding reserves, whether it be in war or not, because of its trust versus a treasury market which has been weaponized, where if you're not on the right side of the U.S. interests, that we can, in essence, take your treasuries away? In other words, do you see it integrating into the system in any way as a reserve asset, replacing or standing alongside the U.S. Treasury, even in times of peace?
You see, that makes a lot of sense, and therefore it can't possibly work, right? Yes, it's a asset of trust. Well, that's not going to be very popular amongst politicians, is it? Yeah. Oh, I can't lie and cheat with gold. Oh, we don't want any of that. Yeah. So, the point is, it's something that, gold was weaponized. That's why America ended up with all of it at the Second World War. At the end of the Second World War, America had all the gold, basically, full stop. Yeah. And it is a weapon. It starts out as a weapon. That is what it is. That's why it's for war. Right. So it has a use case as something that has high trust and universal value. OK, now the US treasuries have had high trust and will remain with high trust, even though it's no longer AAA or whatever it was, which, by the way, used to be the definition of what an American treasury bond was. That's where all the ratings came from. The highest rated thing of all time is the American treasury bond. But anyway, that's just finance for you. The point is, everything has a different value depending on the environment around it. Yeah. So if gold, its use case becomes more critical, like, oh, we better get some of that. China's buying gold because, it's thinking about landing on the cliffs in Taiwan. So they have to buy gold, don't they? They just have to lay it in. They have to DCA gold in as much as you would have to buy steel if you're going to make tanks. So that they're laying it in. And because countries are laying it in, all the people that used to play around with gold and private investors who like gold and push them about because they were institutions and private investors can't really fight back, they've had to get out of the way of that. They can't fight governments buying gold. And governments aren't buying it because they want to issue gold coinage to the peasants so they can walk around with pockets full of silver and gold. No, they're buying it because if they have to, buy ships from some country that is neutral, they're going to have to send a submarine out with bars of gold in it.
Right. No, and that makes sense. I guess I'll just simply say, do you see it in any in any capacity, do you see any path for gold to find its way to being a core part of the global financial system moving forward? Or will it always just be a tool of war in your mind?
Well, I think what you're asking is do you think gold would be remonetized?
Yes.
No, because governments in the modern world need the flexibility of printing confetti. And confetti is very, very flexible and very stable. When you think about what the value of the dollar has done and what the value of gold has done, gold's more volatile than paper money. Gold's gone up way more than money's gone down, for example. And it can move more in a day than any currency will move, or any proper currency anyway. I mean, if gold moved 5% in a day, you go, yeah, well, yeah, it moved 5%, and that's nice. Dollar moved 5%, it'll be on the headlines. So, you know, the only reason why people don't like fiat is because you haven't got enough of it. or the little they have got of it is being devalued by the countries that are up to their monetary policies. I mean, if you look at what's going on with the fiscal budget, yes, it will. Well, people would say if the money was gold, they couldn't get up to this monkey business. But actually, it's not true. And gold has, as money, all sorts of difficulties. There's all sorts of trouble with gold at the turn of the 19th century because there wasn't enough of it. The economy was growing, and they didn't have enough underlying gold to make there be enough money to go around to actually do the job of gold as a monetary thing. So that caused all sorts of trouble. And then they discovered some in South Africa, and then the gold flowed and the economy expanded. And, you know, if you go back to the Middle Ages or the late Middle Ages, when Spain stumbled on all that gold in South America, there was runaway inflation in Europe because the gold was flooding out of South America into Europe, and money supply went up because gold supply went up, and it was not quite hyperinflation, but there was runaway inflation. So it's not this magical stable thing that everybody says about gold. And I don't believe gold is God's money. I just believe that gold is going up a long way, and therefore I want to be exposed to it. And there's other alternatives. I mean, a lot of people love silver, and I've got, you know, piles of that as well. Not that it's my favorite, but I mean, if you look at platinum and palladium, which are equivalent in terms of, well, they're much rarer, and they are also monetizable, and they are also, you know, great in industry. And there's only like 20 tons a year made of platinum, 20 tons, not 3,200 tons of gold. And it's only $1,000 an ounce. So, you know, I think one can have a broad view without having to believe that we're going to be walking around with eagles again in our pockets.
Right. And I don't know that I believe that either. I think seeing it integrated, perhaps standing behind treasuries, as Judy Shelton advocates for, maybe we'll see. To your point, platinum, the futures trading on May 21st, just a few days ago, on the COMEX reached an all-time high, and that indicates strong institutional interest as well. And also to your point about production, China's out. Their domestic production is 2 tons annually. They just imported in April 14.5 tons of platinum. So there are others that see the value in platinum the way you do as well. I agree. Last question, because, you know, I don't know that someone listening to this would be clear as to where he or she would want to place their wealth to preserve it. And if we are on the cusp of fundamental shifts, whether it be countries preparing for war or some form of a new monetary system, a reset, whatever it may be, what would be your best advice for someone trying to preserve wealth? Not just make it, but to really preserve it in this environment moving forward?
I did a lot of research on that not too long ago on the basis of the worst case. Okay. And it turns out you want a quarter of your money in cash. You want a quarter of your money in productive assets. You want a quarter of your money in stocks, and you want a quarter of your money out of the country. And that's the master plan if you thought the balloon was going up. Yeah. So if you think the worst of the worst of the worst of the worst thing is going to happen, like you were, Jewish and you were in Berlin in 1936, that would be the master plan. Quarter in cash, quarter in equities, quarter in productive assets. I don't know, a apartment rented out, and a quarter out of the country.
Where would be your jurisdiction out of country if you were going to choose one?
In today's world, well, Switzerland is obviously quite good. It's not as invulnerable as it might have been maybe back then. There's United Arab Emirates, there's Singapore, Australia. I mean, I think one doesn't have to go, right, it is the end of the world. It is the zombie apocalypse. The nukes are coming in 10 days. I need to have this extreme layout. You can just say, I'm not very comfortable. How do I get myself comfortable? How, as the ratchet turns, I can then go, oh, okay, well, move that over there then. Oh, I'll push some of that here. I'll move some of that there. Where are my pieces on the board, right? Rather than go, oh no, the thing has happened. I can't buy any airline tickets because they're all gone. Oh, I've got all my money's tied up in something I can't sell. Where am I going to do with my gold eagles? I can't get them through the airport metal detector. You need a structure so that you can say, well, I'm gonna that money I've got in Switzerland, I'm gonna put it in Swiss stocks because I think it's gonna, or in a brokerage in Switzerland, and I'm gonna buy these stocks with it. So I'm gonna take the cash that I've put abroad and I'm gonna buy an apartment in Geneva. I'm gonna rent it out there. So you've got the flexibility to move this all around, and it probably, what you're protecting against doesn't happen. And there's no point saying it is going to happen. I bought a boat. I put all my money in a boat. We're heading for Tahiti. Oh, it didn't happen. Oh, we turn around now. Who's going to buy my boat? The structure of quarter in cash, quarter in equities, quarter in productive assets, and a quarter out of the country gives you a platform of a lot of flexibility to move things about as you see fit, and it probably never happened.
Yeah, in a world of uncertainty, that's sage advice. So tell me, and I appreciate very much, Clem, you being here today. How can people follow your work, find out more about what you're up to? Because your take is fresh. It's different than a lot of the people who are interviewed on these channels. And I appreciate your candor. I really do, and the way that you look at the world. I think more people need to follow what you're doing. What's the best way to do that?
Well, I've been writing for Forbes for like 25 years. So you can see my stuff on the site. People always, I live in Monaco, okay? And quite a few people understand what that means. Yeah, and the reason I do this stuff, and the reason I write for Seeking Alpha and for Forbes, is it's to consolidate and crystallize my model on these things. Because, one can go, have all these ideas and not force yourself to really, really grind down on them and try to get them nice and crystalline. So I would say to people, well, you can read my stuff on Forbes. I put up a few articles a month. You can occasionally, I'm on Seeking Alpha, but that's more like about which stock would you pick. And I don't really like to pick stocks, although I do occasionally when something glares out at me. But people should look at what I say as raw material. Yeah. If I'm more than 50% right, that's good. Well, I'm a lot more than 50% right, which is why I live in Monaco. But I'm just raw material for their theories. You should just think about it and go, that's rubbish, that is. No, it can't be right. And what about this? Oh, that's a bit interesting. Oh, that's wrong. I'm going to look that up. Oh, it's not wrong. It's right. So the best way to take anybody's opinion is just to viva it yourself, just to put it through your pestle and mortar and see what's good. So, if they want to see more of what I've got to say, right or wrong, it's on Forbes. And I'm setting up this site called newfn.com, which is going to be quite exciting. I used to run some pretty big financial websites in the past. And this is my new iteration coming soon, sometime this summer. And if they want to be on the guest list, where only the most select people are allowed to join, then they can just go and drop an email. And when we've got something to say, we'll email them and say, come and have a look.
Wonderful. I hope you'll let us know when that is up and running, and we'd love to have you back on down the road and pick up where we left off. You're a fascinating guy, Clem, and again, I thank you very much.
Miles, can I just say one more thing?
Please.
People should look at American defense stocks because they really haven't moved. Now, there's two reasons to look at defense stocks, because if they start to really move, then boy, it's gold going to move. Yeah. But it also suggests if the market's right, there's not going to be a connection with China. But if it starts to move, that would suggest that those things were going to be about to happen, or are queuing up, or the tension's going to rise. And when it reaches a certain stage, if that is going to happen, if we are going to go into a face-off between America and China, those stocks are going to go ballistic. The reason they haven't gone ballistic is obviously America has told the Europeans to get on with it. And the Europeans aren't going to be buying American equipment if there's a kill switch on it, or even the risk of a kill switch, or even a risk of them not being supplied it. So maybe that's holding them down, maybe not. But they are really not moving. If you look at the European defense stocks, they've all gone nuts. So there's an opportunity there. I'm not saying they're going to go nuts. I'm going to say there's something to watch out for, because the moment they do start to move, because we don't know, right? We don't know what's being said in the Pentagon or in the Oval Office or at the NSA or whatever. We don't know that. But a lot of people do. And when they're starting to go, "Arr," you'll see those prices move and you go, well, wonder why that's happening. And that's because something's happening. You can see what's happening behind the closed doors in the market. And so that's a very good indicator. So keep an eye on, the Grummans and the Raytheons and all those lot. Then if they start to go, you'll get an early warning. And it could do that. And then obviously someone had a nice meeting and they had a cup of tea and they all got friends again. It go back down again. But you will get a lead from the defense stocks in America if they start to go strange. If they start to go strange, you'll know there's probably something happening, and that will give you a canary in the coal mine signal for things like gold, and also for maybe jumping on them. Because I tell you, go look at what's happened to the European defense stocks. They've gone mental. And why wouldn't it happen in America?
Especially with the $1 trillion dedicated to our defense bill this year. I think you're definitely right about that.
So keep an eye out on those.
I will, Clem, and I will certainly hope to pick up with you not too far down the road where we left off. As the Chinese curse goes, may you live in interesting times. These sure already. Are interesting to say the least. So again, I thank you very much for coming on, and we'll do it again.
Thank you, Miles. Thank you.
Hey, absolutely, my man.
Little by Little with Andy Schectman.